Hello, 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 everyone. Mike Arnold here, co-founder, Patrick and Partners, along with Bob Iacino. How is everyone doing? Good afternoon, Patrick. Hello, Ahmed. It's going to be a pivotal week. Hold on. Hello, there's not going to be a pivot. Are we talking Fed? Are we talking the market? What are we talking? Yes, it's going to be a pivotal week. We have some stuff coming up this week. The long-term direction is lower. The end of the week lower. I don't think there's an obvious direction. If I think there's an obvious direction, I gotta go back and look at my stuff because nothing with this market is obvious. If I think it's obviously going in a direction, then I gotta question myself because this market's not been easy or obvious. Good evening, Anissa. So, do you mean a pivot in the market or a pivot with the Fed? Because the Fed is not going to pivot. All right, let's take a look. Speaking of the Fed, well, before we even get up into that, if you like what we do, subscribe, clicky the buttons. That's all I need to waste on that. Click for the good information. We got Fed Speak tomorrow. That's it tomorrow. It's Fed Speak. Fed Speak. Don't ignore it. Tuesday. Your weekly red book, economic optimism minor, inflation expectations minor from the consumer, more Fed speak. So Monday and Tuesday, Yeah, the only thing, I don't know what the Fed could speak unless the Fed comes out and says something like very dovish, which they have not even really alluded to so far. There's not much I think they can say that's really going to do the market more harm than has already been done. And I don't really mean harm. I mean, hey, this market needs to correct. You notice how nobody complained on the obscene outperformance to the upside when it was keep rates at zero, pump all the money, do all this QE. Nobody complains when it's going to the upside. Even on an output like, hey, aren't we overdoing something where, I mean, markets don't normally go up at this multiples for this long. Nobody complains then. But, just even trying to take out the excess, people freak out left and right. You got to cut, you got to pivot, you got to do it. We can't have it. You know what? Nobody complains in the one direction when it's even absurdly outperforming. You can't do that forever. Oh, Wednesday we got PPI. Still forecast at 0.2%. Core PPI 0.3%. Unless that comes in at a big miss. If it comes in, a big beat would be lower, miss would be higher. So unless it really comes in at a big beat, I should say, the markets then could react a bit to the upside. Then we get the bigger thing in the afternoons, the FOMC minutes. Do not ignore that. And we have more Fed speak. So Wednesday really starts kicking off stuff in the morning before the market. And then with the minutes in the afternoon. Thursday, it really gets hot. We got CPI, we got inflation, we got all that stuff, plus job claims. For Thursday, 1 hour before the open, 7:30 Central. Do not be sleeping because this is gonna be really when the rubber hits the road. Inflation rate still forecast above 8%. Even if this were to beat and come in with a 7 handle, not going to shift drastically what the Fed's going to do. Core inflation still expected to be higher than previous and coming with a 6 handle. That's very high. So, I guess, unless it's a major beat. And Friday, retail sales Friday, still forecast to be growing. For the headline number, X autos forecast slight contraction. Then we got preliminary consumer sentiment. I am going to watch for this to start pulling back more aggressively. Now we're out of summer and gas prices is going up. So Everything's backloaded this week, starting off on Wednesday, but Thursday and Friday are key. Remember, I don't know how you can forget, Friday pretty bloody, but if you look at the week performance, there's still a lot of green. Not for Tesla, but a lot of green still. Yeah, it's a decent bounce, still a decent bounce week. By the way, we are still set up, as I mentioned, for Friday for potential capitulation. There's no guarantee that's going to happen. It's just the conditions warrant it. That it could be a possibility. FOMC going into PPI, CPI, and retail sales at 80% for the 75 basis point. I will be paying close attention to this with the CPI number. We are still in negative gamma territory, so volatility, volatility, volatility to the upside and downside. We'll have to take a look at this, but look at where you're getting a lot of put gamma appearing to the downside. This will be magnets. You see a lot of magnets to the downside. 3620, 3600, 3650. We got a lot of stuff, 3600 to 3650. Do not ignore that, because you can get magnet moves with that. We're back in extreme fear after just popping into fear, so we're still watching for a more substantial bottoming pattern, which could be capitulation if we were to get some kind of move. Just because we're in extreme fear, we can stay in extreme fear. Just because we're oversold, we can stay oversold. It's a bear market. We are still overall fairly valued. Also, this week, kicking off third quarter earnings season. So you get earnings also along with earnings, because we've had a strong dollar, we can see some more earnings surprises. Earnings surprises, and I mean mainly thinking earnings surprises to the downside. Although you have had earnings revised lower, I think we'll see more misses to the downside than beats to the upside. And big day for this is Friday. Not for misses, but just overall. You got the banks kicking off. This is when it really gets kicking off on Friday. Before that, we got BlackRock. Domino's will be interesting from a consumer point of view. That's the big, and you got Pepsi. Cigar, are they going to get their Tesla trucks in December? But that's separate from earnings. So, Pepsi starting off Wednesday morning, but you see everything's backloaded in the week with that too. Be prepared, though, also with earnings, even if they're beats or meets expectations. If guidance stinks, that's what's going to cause more potential downside risk. And anything you can get, as we did with AMD, guidance can really be a bloodbath. AMD, even though you had a lot of bounce in semis, look what happened to AMD with their guidance. Guidance and down. 13 then this is from the prior close, not just a single bar, but down close to 14%. This won't be a one-off. So I alluded to this. I put up a sector overview. That's why you got to be so careful in a lot of these plays. That's why overall I suggest the underweight if you're trying to play this from the long side, unless we get a capitulation low, and then that would be more of a medium-term low going into year end, and then you can go. I'd still recommend slight underweight. Sorry about that. I'm a little parched. All right. So where do we sit with this? Where do we sit? S&P, after hitting all the targets on that double, closed in below 62.5, still warrants from the probability standpoint the lower price levels, 36.02 to 35.51. As I pointed out with the put call strikes, we closed at 36.53, so just above that 36.53, but we have magnets 36.50, 36.20, then 3600. And the harmonics favor retest that 3,600 level with the daily cycles rolling over. Yes, this is a potential double bottom. If we did get a daily close back above 3820, that could theoretically take us back to 4,000. I will be watching that. So we do have a bullish potential upside. Even if we start the week off lower, come back down here to retest the lows back from October 3rd, you still have this bottoming play in play. So we don't need a capitulation bottom. That would be the other bullish move besides setting up for shorter term buys, which you'll have to tune into the live stream to get. But that's where we sit just from that weekly perspective. See coming up, hitting that weekly rotation zone. That's the first reaction. Still sitting at that weekly 200. What would be interesting also is if we start breaking below this weekly 200, which is 35.90, we could trigger some pretty decent selling. We bounced off it. So this is going to be a very key week, not just in terms of what's backloaded with CPI, PPI, earnings coming in. This is going to be a big week from a technical perspective. All right. Mike, when I read the S&P investment grade upgrade on Tesla, it seems like they're looking at Tesla more favorable than Moody's. And they're looking at the pipeline ahead, which I think is complete. But remember, these rating agencies, I think, are complete garbage. It's like analysts. They're just like stock analysts. And I'm not doing this because they upgraded Tesla. I could care less. It's actually some of their debts rated the same as GM now. I'm saying take it with a grain of salt. When they downgrade stuff when it's already turned to complete garbage, they are way late. It's like all these analysts that have buy recommendations, then the stock gets crushed because they miss earnings. They miss something. The stock's down 20%. They're like, maybe from buy we'll go to neutral. Dude, you were buying and the stock's been crushed 20% and now you're at Look, it's notoriously bad. And it's gotten worse over the last number of years. That's why I could care less about it. So my thing is, don't bother. The horse is out of the barn. Before they do it, it's like, the horse ran away. Hey, guess what? The barn door was open. Well, thanks. The horse is already gone. That's what I think of these rating agencies, and that's what I think of stock analysts. So that's my 2 cents on that. It doesn't matter. And people are saying that's the reason to buy Tesla, or just looking for a desperate reason to buy Tesla. Yes. Will you have bounces in Tesla? Yes. Will you get pumps going into trying to close this Twitter deal? This should be pumpalicious time for Tesla. You should see Elon on Twitter constantly pumping. Even pumping, Taiwan going back to China. What garbage. Who knows what Tesla's going to announce in the next couple weeks? Well, I should say Elon's going to announce to try to keep it shored up because he can't sell yet until earnings. So he can't, there's going to be some interesting selling pressure if he's got to sell more. And I think he does have to sell more to fund the deal. No, they don't get paid they're supposedly an independent rating agency. And I'm not just talking S&P. I'm talking Moody's and everything. S&P is the ratings agency. So once you hit a certain amount as a publicly traded stock, they do rate your debt. You don't have a lot. Again, I don't need to keep harping on this, but you don't have a lot of independent thinking. I would not be surprised if they get input. It's just like your boss having your boss write your review, or you write your review for your boss. You know, can you write your review for me? Is PayPal good to short? You mean about their absurd? I think I think they just shot themselves in the foot big time. Oh, we're gonna fine you, which they've been backtracking, but we're gonna fine you for if we think you're spreading misinformation. But you think I'm spreading misinformation, or you think anybody's spreading misinformation, and you're gonna take money out of my account? Guess what? You're not holding any money of mine then. And from my perspective, hell will have to freeze over before I'm looking to PayPal as the first option to do a payment. If that's the only means, there'll be a payment going through just because I have to do a couple things with PayPal, but I'm not leaving any money with them. So, I think, yeah, it's from that standpoint. Is it a good technical short? I've not looked at the stock chart this weekend. Hey, Sashi. All right. Just a reminder again with the S&P, what's interesting is if it did come up to trigger that double, the first and second targets are still within the weekly rotation zone. So those would be the ones I would be focused on in the weekly rotation zone, would be out of the way. NASDAQ, double tops completed. Still should see 10,995 to 10,890, a retest of the beginning of October lows. You see the pivot from the rotation zone, which is exactly why we follow it. Is this also a potential double bottom? Yes, it is. You'd need a daily close above 11,729.75. We'll take a look at that if it gets closer. We should still see a retest of these areas. Daily cycles rolling over. Weekly or daily rotation zone would be out of the way if it were to trigger. And you see near reconnect with the weeklies. But if this were to trigger, you probably get it out of the way of the weekly first and second targets in there. By the way, on a closing basis again, the NASDAQ back below the 200 and did make lower lows this week. The next key support, minor, is 10,740. Major is 10,450 to 10,350. I did not go through that for the S&P. The area is about 34.75 to 34.90. Capitulation below 34.75 roughly is the first sign that it could be from a price level. Remember, it's not just price that pays into capitulation. Other than that, with it closing near the lows, there's no buy signals just set up. We'd have to get overnight price action before we got any buy signals worth 2 cents. Dow completing the doubles, closing right 29,339, where it closed 29,353. So technically closing above the 62.5. So the Dow, probability wise, did not trigger the necessary close to retest the June lows just yet. And no bottoming pattern in the Dow yet. Next major price area on the Dow is until about 27,930 to about 27,850. Your intermediate levels, I'd use your reverse harmonics. 28,4, 28,160. So nothing really to do. So the first two major things I'm watching are S&P and NASDAQ. Russell, essentially first and second targets hit. Not favoring lower prices yet in the Russell either, besides the third target on the double. No bottoming pattern just yet. That way your technically retracement areas from here, these lows for the 62.5. So the Russell will take a look, but the next target's lower. I would use a 75% harmonic in the 87.5, so 1681, 1664. On any rally, first resistance is 1715, next resistance 1731. The VIX will be above 30 at 35 minimum for capitulation. Again, it has to go up more than that. But the bare minimum is above 35. Bare minimum. I have to do the exact calculation on the VIX. DAX holding the little mini double top pattern twice, filling the gap. So at this point, the only thing I'm really watching with the DAX, you take off the real longer term ones, is roughly the 12,184 level. Since we filled the gap and completed the double targets, now it would be 12,184 on a closing basis. Any rally, 12,383 is your resistance. By the way, the notes, the 10-year, you see with the rotation zone again, into the rotation zone, strong rotation down. We do have a potential double bottom on the 10-year. Would need a close above 113.30. 115.19 and a half, 116.14 and a half, 117.09 would take us back within the weekly rotation zone. There's no guarantee that's going to trigger. We have close below 62.5, so it still favors a retest of the end of September lows. 111 even pretty much, then 110.19. Next level's lower. Just because you have a potential double does not have to trigger. Next level's lower, 110.05 and a half, 109.24 and a half are your next minor levels lower. Daily cycle still rolling down. Weekly cycle still at the bottom, still in oversold condition. Dollar index, no close above the 62.5 yet. We're in a reversal zone. It would be a aggressive reversal sell on a close below Friday's low. That would be aggressive reversal sell because the major trend is still up. But the key thing I'm watching for is a close above 112.95. If you get that close, then it would favor a retest of the end of September highs. Remember, we're rotating up after reconnecting with the weekly rotation zone. If all these doubles trigger on the SPX and NASDAQ possible relief rally, well, then the probabilities would say for a relief rally. But it depends on how we have the targets. Do those targets necessarily turn into even a midterm buy? And there's advanced rules on this, but just using the basic rules, which I'd be using the advanced ones on this, but look, if you completed all three targets, are you even above the 62.5 of this sell-off? No. So this would be the rollover zone. Even if you were trying to use the basic rules on the long-term or the medium to long-term system, you'd at least need a close above roughly 4,100 before we'd even consider a midterm long. So would this just be a rally that could roll over from there? Yes. It's where we put the time frames together. Theoretically then, could you get a close above the 62.5? If you get a close above that, then we have the next target area from probabilities. So that's where it sits. Okay? So you got to take a look at all your patterns. That's where I put all the tools together. And we could easily come up here, still close in the weekly rotation zone and rotate down. Or this could not even be triggered. Remember, if we break the 200, you could see a pretty much a kaput move. It's going to be another very interesting week just from a technical perspective, as I said before. Thank you, Newton Fong. Thank you for the super chat. Really, really appreciate it. Big shout out. No, thank you also, Newton, for all the comments you do leave. You're one of the very uh, reliable people that leave comments. I really appreciate that. So anybody who's here, could you give Newton a shout out, please, in the chat for the super chat? Again, somebody's wanting to support the channel. Where else do we sit? We looked at dollar index. You asked about the VIX. I mean, you got the 35s up here. Remember, you see a spike above here. That's where we start getting into that possible capitulation territory. Right now, we've already retested the required area, but we'll see tomorrow. There's not the only thing that starts getting me more aggressively into bullish is when we start breaking back below 24.60. Looking at crude. Rally continues. Its trail stop up against the daily rotation zone. Remember, the next major area for crude is 99.97. So this is trail stops from any bullish. Remember, this topping pattern, we've returned to the breakdown area. This could take a very long time to unfold. Short term still in bullish with weekly cycles still going up. Daily cycles should be at the top. A key area to watch for a trailing stop is on a close below Friday's low. But remember, it can get out of this overbought and with cycles at the top condition by more of a sideways move and catching back on the daily rotation zone. Unless we get back below about 82.80 on a closing basis, not interested in any shorts yet. Unless we have a very short-term topping pattern, which we do not. Was watching for the wedge pattern that's now gone even higher. So we'll take a look on that next key thing. Should we continue higher next week? I don't trade often enough for me to use TradingView, but all the stuff Mike and Bob teaches that doesn't use TradingView has been. You can do a lot of this, Newton, in other trading platforms. You don't have to use TradingView. Look, as long as your trading platform that can modify the retracements, fib retracements, to your key harmonic levels, as long as you have some kind of Fibonacci extension tool, you can pretty much do what I'm doing. You just replace their default levels. As long as they let you edit their levels, you don't have to use TradingView. Why do I put up TradingView? Because it's accessible to a lot of people. I can look at it in a lot of different things, and I don't want to share out my multiple trading platforms because I've done that before and accidentally showed my account number or numbers, which is not a smart thing to do if you're a live streamer. It's a nightmare to change accounts. On multiple things also. Thanks for the shouting out, Newton. There you go. And yeah, thank you for being part of the crew and learning. I am also keeping a very close eye on, remember, we had the intervention when it started pushing up in the high 145s. We're pushing up there again. We could be on the verge of another yen intervention. So do keep that in mind. I think it will fail again on a pushback, but short term, it could affect the dollar. Also, to do repeated interventions will probably require Japan to sell bonds, longer-term bonds and notes, which could have an impact on our U.S. interest rates because selling them push up interest rates even more. So this could get very interesting if they need to keep intervening, especially if they're going to keep their pegs on their 10 years, which is pegged at 25 basis points. So don't get caught off guard with that. If we do that intervention. Euro, still above the 62.5. The only thing, it is a bullish buy on a close above Friday's high. Other than that, we closed below 97 again, watching for a retest of end of September lows. Pound, there's no great signals just yet. Watching for a continued pullback though. Bitcoin, still, the only thing we have is a double top, which has hit the first and second targets. Overall, still in major consolidation. I'm just going to be keying off the overall markets. Still long-term watching for the breakdown play, especially if we get a major breakdown in the markets. Ted, thank you. Shouting out Newton. Oh, there are a lot of good people here. And I'm sorry there are people who abandoned this channel this week. Sorry to say, because they did not like my shout-outs about harping on following the FinTwit stuff that CS Credit Suisse was going to go belly up, that it was not going to happen at the beginning of the week. Could it still go belly up? Yes. Are we going to have things break in the markets? Yes. We will have things break, but you, first off, don't listen to everything on FinTwit. Most of it's a bunch of crap. Not most. There are some good people to follow. A lot of it's a bunch of crap. These are the same literally people who promote stuff that, you know, AMC to the moon. Tesla's going to produce 20 million cars by 2030. There's a lot of stuff promoted out there that's crap. Do I think Credit Suisse could go under at some point? Yes. Do I think other things will break? Yes. But if you're going to abandon the channel because I'm telling you, stop going in each day, buying puts and leveraging your stuff up because you think Credit Suisse is going to go off over because of FinTwit, you're probably wasting your friggin' money. Yes, things will break. As I said, it's like me living in LA, yes, could we have a major, I don't live in LA, by the way, I used to live in California, but could there be a major earthquake in LA? Yes. Do you walk around every day like running from door frame to door frame because the big one could hit? No. You're prepared. You know what to do. But you can't live your life that way. Just like you can't live your life shorting everything or going long things because of what FinTwit says. Ugh. And if you don't like what I say, and then I guess you should leave this channel. Because there's better ways to prepare than listening to the rumor mill. Just trying to save you from making trade. There's plenty of information we can utilize to make trading decisions. You don't make it off of FinTwit rumors. Tesla, by the way, should still see some lower prices. Tesla earnings aren't until the 19th. So we got a week clear of just Elon pumps before earnings. Should still see 220.33 to the low, as somewhere in the low area that was tested in May and June, and with the dip in July. There's lots of key support down there. Those are short-term targets. Based off this, we can't really update to a longer-term area. So the next key level I'm utilizing between the 100% and the 87.5 is a major 50% harmonic and a minor extension harmonic, roughly 1280 to 213. Any rally is against the rotation zone at this point. There is a gap left behind from Thursday to Friday, so that would be the only short-term bullish play for those Tesla bulls. Thanks for the thank yous and thanks for the tip about using harmonics and other platforms. I didn't know that before. Again, I try to show stuff that you can do on most platforms. You don't have to be on TradingView. I am not here. If you want to subscribe to TradingView, I have a link in the description. You know, it gets me some credits because what I use TradingView for is for this live stream. So I pay out of my own pockets over $600 a year just so everybody can look at it for the live stream, plus data fees, because I think this is a good teaching tool and it's accessible to a lot of people. And it's a good tool if you do have the money to use. I mean, there's some good things you can program in it. Thanks, Christoph. Or move to Panama. Why? Who's going to move to Panama? Why are we moving to Panama, Coco? Thank you for being here. All right. Ted, what do you? This is a channel that helps me shut out all the noise. Your experience in the market is invaluable. Your ability to see the signals and act appropriately and responsibly is something to aspire to, which is what I am trying to do here. Thank you, Ted. We're not pumping stuff. Even when we get into bullish modes, anything I review is not pumping, is not trying to get people to invest in anything. It's literally, my goal is to help people learn to analyze the markets and to keep a clear head. And there'll be things that work. There'll be things that don't work. Overall, let's just see. By the way, the major area I'm targeting for when Tesla does break down again, whenever that happens, is 163 on this post-split prices. And that's not for the next week unless it was disaster. Although if you get substantial Elon selling, it could get pushed down there. Preview of the stock market opening tomorrow. Well, generally when it closes on its lows, we do see at least a down test of the Friday's lows. We don't have a great signal. So overnight, once it opens in an hour, 20 minutes with the futures, I'm watching for the futures to retest this low area from Friday. You had covering going into the close on Friday. Overall, there's not even a short-term bottoming pattern that's worth 2 cents to just get long or short. The next key areas for overnight trading, major resistance is back at 36.65 for the S&P. So on any rally, that's the area I will be watching overnight. And major support 36.33. Everything between there, from my perspective, is noise. Because when we have a close like this, first off, I will be watching how Europe opens. So that's what's going to be key for me, as long as we're within this range. Other than that, the first major signal I'll probably get will be tomorrow before the U.S. Open to see what price action we did put in. Because it's just risky to try to do anything after this kind of selling pressure. Now, based off the probabilities, but this does not have to happen overnight or tomorrow, but based off the probabilities with the close below the key levels, the 62.5 retracements, we should, and this could happen Monday, Tuesday, we should retest this low area based off at a probability of above 70%. Does that mean you have to break to new lows? No, but we should retest the low area. The other thing I did not do when I looked at the S&P before is for the minor levels, use the reverse harmonics from the high back on Wednesday, which was the higher high, I forget. Yes, the high on Wednesday to the low back on the Monday. Those will be minor levels, not for tomorrow unless we break below Monday's lows. But those will be the levels I will be utilizing, the minor levels for the breakdown play. Trying to teach everybody what to do. So that's, overall, we favor a retest of Monday's lows. It does not have to happen overnight. Good afternoon, Davey. Retest. The retest for the harmonic probabilities on the close below the 62.5 is the 87.5 to 100. We've already tested the 75. We tested the 75 on Friday, but the core things from the probabilities I utilize is the 87 to 100. The 75, remember, is the bare minimum we have to do to get a potential double bottom. But that's not the major stopping point. Yes, the 87.5 to 1 is the major retest area. All right, good afternoon, Davey. I think I said that before. All right, that's good for today. It's a nice day here after a very cold morning yesterday. I'm going to go enjoy some of the sunny weather and have to run to the grocery store to figure out dinner. So I'm going to wrap this up. I will be back in the chair tomorrow. Happy Sunday, Daniel. If you're tuning in late, watch the replay. Went over a lot of stuff. Also, check out the sector overview. I tried to explain how I look at stuff, not only with the medium to long-term system, but how I tie it in with the weekly 200. So I think that's worth a watch. Thank you, Anissa. Thank you, AP World. Thank you, Davey. Thank you for all the people hiding in the background and the people tuning in later who couldn't make it to the live stream because it is Sunday afternoon or evening and you might be doing other things. Thank you, Patrick. I will see everybody in the chair tomorrow at our regular time, 8 a.m. Central. Thank you, Ted. Have a fantastic evening. Bye.